Hello friends. As you would be knowing that the biggest problem in GST for most of the dealers right now is कि जो GST they actually purchase from the suppliers because of any reason. If the supplier is not able to do the proper filing, or if he is not able to pay proper taxes, a lot of times actually the recipient or the final purchaser, who is a bona fide purchaser, gets to have the problem, because he is being given the served the notice by the department, and he is liable to make payment of taxes under section 16. So I have tried to compile some very important information for them that they can use to their benefit to understand and protect themselves in all genuine cases. So this is a small presentation that can help you understand exactly where is the law standing as on date today. So the first thing that is so important for us to understand is that what is actually the section 16 2 and section 16(1) of the GST. So section 16(1) of the GST allows basically a person to have the input tax credit subject to certain criterias of section 16(2) being mentioned. Among the first criteria is that the recipient must have the invoice. The second criteria is that the recipient must have the actual receipt of the goods. Then third criteria is that the supplier must do the compliance of filing the GSTR1, and it must reflect in the 2A of the recipient. Then the 3B must also be filed. Now, till this compliance, everything is okay. The basic problem happens is when you see another criteria in the section 16(2), which is subclause C, which says that the tax must be actually paid to the government. Now, this criteria is laying a situational issue for the person who is the recipient. How will he check the tax to be paid by the supplier becomes the big problem. So, say for example that there is a bona fide buyer who has basically made the payment of taxes along with the invoice value to the supplier, but the supplier is not able to pay to the department or deposit the tax to the department. Technically, it becomes impossible for the supplier to basically do a real time verification of the things, because there is no statutory mechanism that exists to identify that the specific invoice has been paid or not. Secondly, the supplier's GSTR 3B is a lump sum return, so it cannot be linked with those individual invoices. As a result of this problem, what is the main consequence that happens to the recipient is that the recipient first pays the tax to the supplier, and then he again pays the tax to the department when the department issues the show cause notice. Now, basically what has happened is, what is the relief that has happened is that there are now certain case laws where the judiciary has decided to read down the provisions of section 16(2)(c) and make it applicable only in case where there is a fraudulent or a collusive deal, where the recipient and the supplier both are combined together in some collusion to result into a particular situation where there is a loss to the revenue. If there is a case of a bona fide purchase transaction, then section 16(2)(c) has been not considered for the reversal or denial of the input tax credit. Now, the question is, what are these judgments? Then there are two very important judgments, and essentially both of them have come from eastern part of India, the high courts of East India. One is a landmark judgment in case of Sahil Enterprises by the Tripura High Court, and the second is by Guwahati High Court in case of McLeod Russel. Now, if you just basically go through these two judgments, there is something very discrete. The discrete down effect is that where the supplier has given the invoice to the recipient, and the recipient has made the bona fide purchases, and the recipient himself is then basically somebody who has made the GST payment to the supplier also, then essentially the department, as per this court judgment, is first to pursue the supplier only. not to pursue the recipient who is a genuine buyer, because it is impossible for the recipient to basically take cognizance of the compliance at the end of the supplier, and this has been considered by the high courts. So this has therefore led to a demand being quashed. Department first must pursue against the defaulting supplier. Similarly was the case where, again in McLeod Russel, the bona fide purchasing dealer cannot be denied the ITC for the seller's default unless the collusion is proven. So it was ruled in the favor of the taxpayer. Now, essentially, these two judgments do not come on their own. They have their backing coming from some other judgments also. There was earlier two judgments. One was in the DVAT regime by the Supreme Court also, which confirmed the findings in case of Arise India. And secondly, there is a precedent to this where in case of Suncraft Energy Private Limited, even the Calcutta High Court also said that first you pursue the supplier. First, you pursue the supplier and exhaust all your options with the supplier, and only then you go for the recipient. But there is a difference between Suncraft Energy and the earlier judgment that we have discussed in Sahil Energy. In Sahil Energy, they have not even said this. They have immediately quashed the order on that ground that it was not pursued with the supplier. Whereas in the case of Suncraft Energy, they said that okay, you first exhaust your remedies at the supplier and then you come to the recipient. So I personally feel that to some extent, Sahil Enterprise in that case is even a more bolder judgment in the favor of the bona fide purchasers that they can use out. Now, essentially, that does not mean that there are only good rosy judgments. There are three judgments that I identify right now, which are basically going against the recipient. Which is number one is the Trendship Online Services by Allahabad High Court. The second is the Global Offset Printers by Madras High Court. And the third is RV Enterprises by Gujarat High Court. Now, these three judgments in spirit have just simply said one thing, that it is the act criteria of section 16 to see that the tax must be paid by the supplier, and wherever the tax has not been paid by the supplier, immediately applying the act as in toto, the input tax credit should not be allowed, and therefore they have taken a strict view based on the Supreme Court's E. Gill Coffee judgment also, which essentially landed them to a view, these high courts to a view that okay, the ITC should not be available. So now, considering both the situations, you have got two views. One is the protective view, which is the Tripura, the Guwahati, the High Court, Calcutta High Court view, and the second is a more stricter view. But in stricter views also, remember that there has been certain sense of collusion that would have been involved. I am not saying that it was completely a collusions case, but more of my view is that wherever there is a protective view that is there, the court's view have been that wherever the collusion cannot be proved and it's a case of bona fide purchaser, then the protective view should be a more dominant force. Although, since this is something which is a dichotomic decision between the two, therefore it is the final Supreme Court who has to basically deliver the judgment to understand exactly where we are going to go about and settle this issue of. But there are two, three very important things. One is that there was a circular already in 17, 18, and 18, 19's case by the CBEC themselves, which recognized that this is a problem, and they issued a circular saying that if the difference is less than 5 lakhs, then you go for a self certificate saying that the supplier has made the payment of tax. Whereas if the issue was more than 5 lakhs, then the CMA CA certificate of the supplier saying that yes, the tax has been paid. Now, essentially, what is your way to basically handle it? So, if you are a bona fide purchaser, which I am actually of the view that anybody who is listening to this will be aggrieved by the bona fide purchases, then there are 4 steps that you must really pay very harsh, important attention to. The first step is that do a proper thorough vendor diligence. That is so important. Without this, these days no transactions happen. Second, maintain a proper payment trail. It must be done through the banking channels. There must be a contractual safety and indemnity clause also in the contract, and there must be transactional proofs to safeguard you in this whole process. I think this will basically help you to ensure that the demand procedures that may be initiated by the department can get challenged properly. And also remember one more thing, that the fact if the department raises the demand in 73 and not 74 in itself is one big advantage that you have to protect yourself, saying that this was the demand which was raised in 73. That means the department has never pursued a case of fraud or a misrepresentation or a collusion against you, which is a fundamental force for you to go and take your strength from those Tripura High Court and Guwahati High Court judgments. So I thank you all for listening to this overall thing. If you have any queries, you just drop in the comment box below, and I hope that this presentation would have helped your professional endeavors. Thank you so much for listening.